Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets today, Monday, May 2nd. We are now into May. My name is Todd Rich. I am with Nadex. With me, Brian Caprice from Keep Trading Simple. Not a lot to really go over this morning. We're starting a week. Markets are relatively flat. I mean, we know that April was not a good month for markets. The equities absolutely got hammered. Here we are in May. Everything's sort of taking a little bit of a pause. We do have a little bit of volatility in the energies, so we are going to be taking a look at energies, oil and nat gas. That's being driven by what's going on in Europe. So we will discuss that. We are going to also take a look at gold. Gold is moving lower. The big thing this week, and I think this is what everyone's doing, is everyone's digesting what happened in April. We're waiting to see how the war, Russia's war on Ukraine, continues to play out. And Wednesday, we've got the U.S. Fed making an interest rate decision. And I think we're all expecting now to see 0.5 with the possibility of 0.75 on the table. Do they shock the markets? I don't know. I think people are kind of waiting until then to see what happens. So that's probably why we're seeing a bit of a muted open generally across the board. But we are going to take a look at a few hot spots, give you some places to look for potential volatility today. We do have the ISM Purchasing Managers Index at 10 a.m. this morning. That could potentially give us a little bit of a view on the U.S. economy. So we do have a number later this morning. I'm just not sure how impactful it'll be. Although with nothing else going on, it could move the markets. All right, before we jump into the analysis and take a look at the headlines, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. We are going to take a look at, I mean, it's odd. Crude oil's hovering near 100. Who thought that would be low? I mean, that's still a ridiculously high number. You know what, Brian, let me flip it over to you. We'll take a look at the energies.
Yeah.
We'll take a look at gold and
Sure.
and get people ready for this week.
Yeah. I mean, it's a very slow Monday morning. The biggest mover right now is really kind of the dollar CAD, dollar Swiss closely right behind it. Dollar CAD is only really moving right now because of, again, oil weakness weakens the Canadian dollar, even after everything. And to say that it's a strong dollar morning, I would say that it's an okay dollar morning. European Union is a little bit weak. Some of the comments coming out of there, but like the pound yen completely flat at 3 pips, euro pound 8 pips, showing a little bit of euro strength, although I would say right now, if anything, the pound is holding up better versus the dollar. And then Aussie dollar down about 16. So we do have ISM manufacturing today. That is one of the not bigger ones, but it is one of the news releases that can provide some opportunity out there. We'll see what it does today. Without lack of any other news, I feel like it could provide something for us this morning. Besides that, there's not a lot out there. It's just headlines. So of the headlines out there, I think this is the one that's kind of the most interesting. It's basically France saying that, yep, no, we're gonna continue to, we're gonna pay in, we're gonna pay in euros and dollars. I think Poland and Bulgaria have already kind of played that game, and we saw what the end result was. It's interesting that France is now trying to play that game also. I'm not sure if they think that like the greed will be too high there or not, but I think the result's going to be the same. That says, okay, fine, you don't want it, we'll just cut it off. It's okay. They're still making tons of money on.
I mean, obviously they wouldn't do this because they know what they're goofing. They're playing around. I mean, this is politics. Something that I don't know what the game is. I don't know how it's played. They're not oblivious to the fact that they turn the other ones off.
And that's the thing is like, we're not going to do it, but then we're going to meet to discuss gas, and we're reassuring Poland and Hungary of our solidarity. So it's, I mean, I guess they just won the election, so maybe if they do it and people don't have energy, they can't get voted out. Maybe that's what it is. I don't know. But I just got to say, I mean, it was a closer election than what they thought it was going to be. If they play this game, again, it could lead to, I mean, I guess you're right. It's a game and it's politics, but Yeah, I think it'll be the same result. I mean, like I said, normal natural gas, if you look historically, is down much, a third of what it is right now. Natural gas is one of those ones that actually is up 2% today. If we kind of bring this back to just a monthly basis, you can see that, natural gas has times where it's high. And again, this was back in 2005 that it spiked this high, but its normal range is about 250. You could cut. I mean, right now, even if you cut, France off and say, okay, fine, you're not hurting us profit wise. The price is over 3 times higher, so they're still making a ton of money on natural gas at this point, and it just shows how much money that they are making right now, and how they can play. And everyone's like, how can they do this? They can do it because the price is 3 times as high, and the demand is probably going to increase even more. So, yeah, it's like I said, it's not really necessarily anything tradable today. But just watch out for it. And then obviously tomorrow morning early, there's nothing. Actually, there is one thing. Australia is raising their interest rate. It's something that we should talk about right now. The Aussie dollar is going down, and I think that's in preparation for this. They're not doing. Originally, they said a 0.4. It looks like they're bringing it from 0.1 to 0.25. So it's not as big as some other nations, but remember, this is their first one. And Australia does have I'm going to say China contagion, because remember, China buys a lot of their natural resources and things like that from Australia, so they are kind of linked in that way. With China kind of locking down, we haven't heard too much more about their lockdowns, but it is obviously having a little bit more of a slowdown dealing with Omicron. That is hurting Australia just a little bit, but they are starting to raise also. So again, that pushing down, it may be an opportunity to play the Aussie Yen tonight. It is 12:30 a.m., right, Eastern time, so it is an early morning release. The way to play that is going to be see what it does today, wait for the 5 o'clock reset of Nadex contracts, and then kind of see where price is hovering and what it's doing. If you want to set something on before you go in, this is kind of one of those opportunities to do an overnight based trade. But the market should tell us what it's going to do based off the movement from now till 10 o'clock tonight. It may be an opportunity to get a call spread or a knockout or something like that later on today. And that's kind of it over there. Charts wise, VIX is up 3%. Again, I would say that the indices are technically in the red right now, but they're fluctuating. I mean, the YM was green a little while ago. They're all about 0.3. News-wise, the VIX is up a little bit, but there's not really much out there. The weekend kind of contagion is over. We didn't get any really blockbuster headlines about it. We're rolling into the later hours of the European session as well. So, I would assume that the VIX starts to creep back down again. We talked about, not having a feel-good Friday. It could be potentially a feel-good Monday if the manufacturing numbers are good, because there's just not a lot of headlines that can really keep this VIX elevated higher. And again, YM starts rolling in the green. People are like, oh, there's a little green out there. So ES, again, you can see where it came down. It tagged that profit target that we talked about last week. It's stabilizing. The real question is going to be today is how much, we do know that we have FOMC. They are raising. This was raised on Wednesday. The question is, how much are they going to talk about it? And in reality, the VIX should come down today. It should provide a little bit of momentum, but the question is how much of this is people looking at Wednesday and thinking that, oh my God, this is it. This is the recession right here. The raising interest rates.
That's what's going to trigger, right?
Yeah. So and again, will the media play on that? Sure, absolutely. They're going to talk about that. They're going to have every expert on talking about this is it. This is what's going to start the recession. Because this is so bad for it. The market has a lot of this already kind of peppered in. So
that's what I'm thinking. Is like, has this already been? Has it been priced in? I don't know. Has it been aggressive enough? I mean, we're down.
Yeah, I think big money 20%. Does have it in. I think big money does have it in. But at this point, I think retail traders are like, oh, interest rates are going to cause a recession, because they keep talking about it. They're like, we want to have, our goal is to have a soft landing. Our goal is not to do this. So people are like, oh God, I should get out now. I mean, people have kind of learned. I mean, at this point, there's been. I always joke, like I've been trading since Y2K. I've gotten to see 2 crashes. At this point, people are a little bit more leery of like, oh God, are we topping? Are we topping? And the chatter is out there. I mean, remember, it's like kind of like the train wreck phenomenon, right?
Well, we're nowhere near the top.
No, but people see that and they're like, raising interest rates, that's it. Everything's going down.
Yeah.
The question is, and I think big money's already prepared themselves for it. The question is, where do you put your money? I mean, you can't put it in bonds. It's typically, I take out of one, I put it in the other one. Well, you can't, because they're raising interest rates, so you're going to lose money over there as well. So, it is an interesting scenario. I mean, this morning again, it is. I would say it's not really. I mean, I wouldn't say it's a risk off or a risk on right now. Again, the YM is back in the green again. Cryptos are up a little bit as well too, but just bare. Like, well, Bitcoin is up 0.2%. 0.1 depending on what broker you're at. Ethereum is down 0.9. Doji is down 1.8. Bonds are obviously crashing lower. So again, it looks like everybody's preparing for Wednesday. Question is it going to take Monday and Tuesday to bake everything in? So Wednesday goes the opposite. Because I'll tell you right now, gold also down 1.7% and accelerating, as well as silver is 1.2 and accelerating. We talked about 23 last week. We were right, and we talked about 22 was on the books for this week. We're 45 cents from it. We haven't even opened the U.S. session yet. So again, coming back down again. So really right now, it looks like the market is preparing for, trying to price everything in before Wednesday. I do think oil, though, is important to talk about because, again, oil is getting back down to that $100 mark. We talked about a big area where we're based and we broke through and pulled right back down into it. You can see that the $100 mark obviously is going to be an absolutely huge psychological number, whether it's above or below. It's sitting right there. Let's do this in black, and then we'll make it huge so everybody can see it. There's the $100 mark. You can see that when we've been down here before, we've had buyers. This is an old area that we were bouncing through, but we've had buyers, and we're kind of pulling off of that one. The U.S. session tends to be where we do get the bull traders to come in a little bit more aggressive fashion because, again, a lot of this is driven by demand in the U.S. We're there now. Am I saying this is a long right away? Not necessarily, but again, as it pulled back, this is where the demand will come in. We know that the demand is not going anywhere. We know that demand is accelerating. And again, a good manufacturing number over here. Again, this could also lead us to a bit of an oil kind of retracement back. And, even just kind of taking the overnight, the high to low in this one, you can see it would have to pull back up into, and again, there's a zone there. There's a small little zone there if you want to, play this continuation. All the way back at 102.19. So, I mean, that's a $2 move in oil. That's not a bad move up just to grab a retracement level if you wanted to take this down, if you were still on the bearish side of things. But $100 will be big.
Just a psychological
it was on the way up.
Yeah,
it was on the way up. It'll be back on the way down. And if it goes below, people are like, oh my God, oil's under $100. But, again, same time, we're going to ban Russian oil. That's it. We're not using oil anymore. It's like, well, where's the oil coming from? That means there's more demand on less of a supply, which means it should also spike price back up again. So it's more of a fundamental matter than anything else. But right now, I would say that for the week, again, look, gold is accelerating. Any opportunity where gold pulls back, and again, maybe we draw some fibs. Pull this down the other way. Whoops. I'm just trying to find bottoms at this point. But that makes sense.
It just keeps going lower and lower.
Yeah, I mean, right now, the 23 is not in a great place. If it continues to push lower, if we can get to 50, we have a line drawn down here at 1843. If it does actually pull down, if I draw fibs to that using it to forecast, you can see we do get a level up here right around that 50% retracement target, right at 1878. I would say right now, no matter what happens with the Fed, again, all eyes this week are to get rid of inflation, or not get rid of it, but control it. Anytime we get pullbacks, I think there's shorting opportunities here. And again, I mentioned last week, let's see, we were right, where is it? Sorry. Yeah, it's right here. Right here. Right there is where we opened. I mentioned last week that, my trade for this week would definitely be, no, not definitely, but last week, again, short gold, that I thought gold and silver were both going to be, down this week, obviously with everything going on. Silver, obviously, harder to play with Nadex contracts, but gold, at the open, the second those contracts open, anytime we get a pullback, look for shorting opportunities. And already since late last night where we opened, again, we opened right there, right, this candle right here. We're already down $40. So actually, this should be moved down here.
It's everyone getting ready for, everyone's going to start raising interest rates. It's starting to happen this week. Mm-hmm. The Fed's going to come in on Wednesday. Do they surprise us? But none of that is good for gold.
Yeah. And like I said, I think NQ has the ability. I think NQ, although NQ is technically the weakest right now, we are finding some buying right here. And remember last week, if you look at the movers of it, Twitter and Apple and things like that, prices pulled back into areas where there are buyers, and Tesla in general as well. We know now what the big decline was. It was Elon selling stock to purchase to acquire Twitter. Yep. But I think all of that at this point is, I think all his shares are done and sold and everything like that. So they said that, there was a lot of selling. Again, he was trying to get the money. So yeah, we're there.
So
besides that, nothing. Currencies are rather flat. Yeah. Again, it's kind of a half risk on, half risk off. Everybody's that's the best way to say it.
It's just a muted Monday. because there's some big things coming up. So, I mean, that's all we got. I mean, if we don't have anything, we're not going to force it. If you got any questions for Nadex, please email us, customerservice@nadex.com. Brian and I are also both accessible. You can email us. If you're looking to catch Brian, please email him, support@keeptradingsimple.com. Not a lot to really recap today. We've got gold weak. We've got some volatility in the energies. The energy volatility definitely being driven out of what's going on in Europe. Gold going down in anticipation of the Fed raising interest rates this Wednesday. The question is what do they actually raise with? And again, how do they answer some of the questions and posture it going forward? But we're going to start putting some, we're going to see interest rates rise to put some bumpers on, hopefully on inflation. Inflation's got to get reined in, and we'll see how that impacts the broader markets as people digest that. I don't know if we've been pre-positioning for that already, and we've already had the sell-off, or if people are waiting for an even bigger washout than we've had in April. So interesting times. We'll have more. Brian and I'll be back tomorrow morning. And until then, good luck in the markets, everyone. We'll catch you tomorrow. Thanks for joining.